Hello, this is Mike Swanson. I'm here with a special guest today. I'm speaking with David Skarica, who runs the website addictedtoprofits.net. Well, Dave, over the past couple of weeks, we've seen a tremendous rally in meme stocks like AMC. There's a new one called Magic Empire. And last week it was Bed Bath and Beyond that really got people's imagination and excitement. It became the second most traded stock on Fidelity on a Wednesday, Thursday, and Friday. People were piling in. It was a true mania, and for good reason, because the stock was below 550 in August and went up to 26. The idea that it could go up to 100 really got people interested in buying it. But then it fell 40% on Friday after declining a similar number Thursday. And now a lot of people are smashed or losing money. There's a lot of worries now that this could be the end, in fact, of the meme stock run we've seen over the past couple of weeks. Do you think it could be? What do you think this means for the stock market?
Well, like what happened in the last couple of weeks, there was a huge just short covering rally in general in these kind of garbage stocks. I know because I believe in like John Templeton and buy maximum pessimism. So I am always looking for stocks that are down 80, 90% from their all-time highs. And I know back in June, I did a trade on Fubo, which is like a streaming service. And Fubo had bad earnings. I actually had it straddle. So my puts made a little bit of money, my calls lost. And I actually did some further out stuff. And Fubo, I probably did it when the stock was $3. And I was kind of kicking myself. So after that trade, I just kind of got rid of the position. It was just a short-term trade. And Fubo spiked to like $6 on this meme rally. And I think my calls at the time were like $4 calls that expired in November. So if I had kept them, I would have done quite well, which is a bit of a learning lesson to me. Yes, we can still learn like everyone else that, some of these positions I should just keep when a stock is really beaten up. And I was actually looking at buying Best Buy just because it was, again, another stock that was beaten up. They got new management. I was thinking maybe they could do like a restructuring and turn the company around. It wasn't anything to do with memes. And when the stock of Fubo kind of broke that kind of resistance around 3, and Best Buy around 6, I was considering. I just didn't pull the trigger. And then we saw this, and what's kind of interesting about these stocks, kind of pumping and dumping like this, is just so you know, on a fundamental standpoint, Best Buy just hired a restructuring lawyer. So that means they're basically bankrupt. So that just tells you what kind of companies you are when you're chasing these kind of, meme plays. But what happened was there was two things that happened in Bed Bath and Beyond. Sorry, saying Best Buy, Bed Bath and Beyond in particular. The two things that happened were, like this kid, like that goes to college, made like $100 million on it. And I read the headline, it was like how this guy made $100 million. And I read the article, and I think it was on Fortune magazine. And I thought it was like some kid who maybe had 20 grand and like, way out of the money calls that were short term. And then he just made a fortune. No, it ends up he's some rich kid who's got some parents' money or family money. And he turned $5 billion. How much can buy $5 million at one stock? And, the stock went from 5 to 25 and he sold. And then another guy was kind of like one of the main heroes of the meme stock people. He just he dumped all his stock too. And that's part of the reason it busted. And what it looks like what's happening now is the kind of big money, the Wall Street big money, instead of just being caught short like they were when GameStop first spiked in early 2021, they are now long these short, these stocks that have large short positions and using the meme stock community, who are useful idiots in their opinion, and using them to pump these stocks and then get out. And then maybe someone who is in this meme stock community who bought Bed Bath and Beyond at 5, or these other short these stocks at short covering and made $5,000 or $10,000 of jumping up and down. These people are making millions or tens of millions or hundreds of millions of dollars. So it's, again, Wall Street is finding a way to kind of use the little guy. And when I see those meme stock communities, and I know it's a bunch of small retail investors, I do remind myself of those stock kind of communities back in the 1920s, where these guys would, like these Wall Street guys, would get together and pump a stock and then all dump it, right? And so I don't think it's some like, oh, this is like ground floor. This is this is the retail guy getting back at Wall Street. I think it's actually a way of trying to corner stocks. And then again, I think the little guy in the end is just going to get, and I think the problem is you get burned. And then I think the problem is because they're not using fundamentals. Like I said, Bed Bath & Beyond has hired a restructuring lawyer. So you think it's going to go to $100? How is a stock that's essentially bankrupt going to do this? And all this is an extension, this big bubble we've seen. And I think actually this kind of short covering / mem stock rally was kind of the end of this rally we've seen in the market since June. Like that, essentially it happened like the last few days of it happened the day the S&P topped around 4,300.
Well, turning to the broad market, then we can look at the S&P 500, and it opened the year around 4,750. It fell quite a lot to 3,650, and NASDAQ stocks fell more. The ARK ETF fell more. So many of the popular stocks of 2020, 21 fell even more than the NASDAQ and ARK. But now we had the rally. As you mentioned, the S&P has rallied up to that 43 level. It hit the 200-day moving average, which is the green line on the chart. Historically, in a bear market, that turns into a resistance topping area. It could go above it for a few days or a week or two, but it's still, you don't meaningfully do much more beyond that if it's a bear market. That's what happened in March. In a bull market, those levels act as support. But here we are right on it. Do you think the market rally is pretty much done then?
Yeah, I kind of do. I think that you could go back to those highs and top out, but I was telling you off air, if you can get that S&P chart and turn it into a weekly chart, if you go look at the weekly action, both in early January when the market topped and that March period you're talking about, there's kind of a reversal on the weekly where the market tries to rally again. And you can see that in the first week of January there, the market hit an all-time high and then reversed and ended lower. That there was a kind of a flat week in late March, but that first week of April, again, the market went higher than the previous week, closed and then reversed and ended lower. And we did that again last week. And in each of those cases, you had a 2 to 3 month sell-off in the market. Now we're in that seasonal time frame where we talk about August, September, October, where we often see these big market declines. Now, this market rally was stronger than I thought. It did, you can see right there, it got back to the 50-week moving average on this chart. And then, but I was looking at maybe 4,000, 4,100, maybe 4,200. It got to 4,300. You're never going to be exactly right on these things. And I know myself, we're looking at now like we've been adding more shorts in recent weeks, re-adding put positions. I sold a lot of puts in like the Apples, Amazons, the big tech stocks, because I figured they would lead away in any bounce. And now I'm going to be looking at adding, and it'll be like a seasonal play. It'll be like, well, if the market doesn't tank by October, November, I can get out of these positions. But it's like, I'm kind of looking and getting very more kind of neutral on the market here. And again, I think one of the reasons we're going to see this too, we're talking about mem stocks and that being a top, but the Fed did not pivot. I don't know how this got into people's minds, why this became the rage, just because inflation ticked down a tiny bit, a month to month, but they did not pivot. If you go look at the Fed fund futures, you go look at the 2-year or 1-year treasury, those yields, those predictions of rate hikes have not come off at all. In 2018, they did pivot. You saw the interest rate increases in December 2018 after the market bottom, they disappeared. That has not happened this time. So, and now you saw the 10-year yield start to go up again. So what I think you're going to see is the 2-year treasury always predicts. You can see the 2-year treasury went to just about 2.75%, 3% the last cycle. Last time the Fed funds rate went to 250 to 275. Well, now this is at 325. So that tells me, and right now the Fed funds rate is 225 to 250. Sorry, I mean the Fed funds, yes, right, and so I think we're going to go another 50 to 100 points, maybe 125 higher. If the market just kind of grinds lower, kind of like did in the second half of 2000, it probably means the Fed will do that full 125. if the market completely tanks in September, October, probably they do that last 50 and that's it. And, or if the market, whatever. But I definitely think you're at least getting another 50 to 75 in September and then another 50 in November. So I think that's one thing you really have to take into account. And there's another thing I'd like to point out here too as well, is that a lot of people think they're going to start coming right down in rates. If you look at the comments from Fed officials, unless there's some kind of complete deflationary type collapse, if you go look at like 2005, 2006, if you can get that up in this chart, you'll see the Fed then stayed at a higher level for a number of years, and I think the difference between 2005, 2006 is then the market kind of held up, even though housing started to roll over. I think the economy is so much more leveraged, so much more debt now. I can't handle that now. But that's what I kind of see is that 06, 05 to 06 scenario where, or 07 scenario where it was basically 18 to 24 months where rates kind of held up and didn't fall.
Well, what you're basically saying is that the interest rates, the Fed fund rate that everyone talks about on television, it follows this 2-year treasury yield. So this is a real accurate predictor then of where rates go, much more accurate than the predictions of the gurus on television and people like Kathy Wood did.
Yeah, I think the whole Fed pivot thing, I didn't really understand it. And it may be like people always want an excuse to why a rally's happening. I think that was their excuse. And I think too, another thing that's happened is people, in the early 80s, we had this key turning point where, the Fed lowered rates, we had these asset booms, and then that led to the late 90s period, starting with LTCM and the Russian crisis, where every time the market would go down, the Fed would cut rates and bail out the market and this and that. And I think, like that started, like I said, in the early 80s when the Fed began to cut rates and kind of created these asset bull markets. And this has been going on for 40 years. So I understand why people can't wrap their heads around it. But I think people don't realize now, after all this inflation, after the cost of living increases, go look where rents are doing, housing prices have done as well, which is, that may seem like a great thing if you own a house, but if you're a renter or you're someone who's, still got a mortgage, it's not that great right now, right? I think that that is now turned where the Fed really wants to try to get inflation lower rather than, trying to bail out all these asset bubbles. If you're the Fed right now, you could say, look, if the S&P falls to 3,000, that's where it was before, before COVID hit, that was the highs before COVID hit 2 years ago, and it was overvalued then, so why do we need to prop up the market at these levels? And I think people, they're using that Fed quote unquote put where they think they're going to be bailed out. And I don't think they're going to get bailed out until much lower levels, like maybe, 20, mid 2000s, kind of the almost 2018 and 2020 lows on the S&P.
Well, in that sort of scenario, and with the meme stocks, the way so many of them crashed on Thursday and Friday, how does people make money in this market?
Well, right now, I think you have to be very cautious. Like I talked about, like a few weeks ago, I talked that you could buy beat up companies. Well, with the spikes in these kind of beat up companies that had large short positions, not just the meme stocks, but, mentioned Fubo and these other things, I think they can't really buy those anymore. And I really think you have to be ultra cautious now. Like you have to be like, if I'm correct, at Jackson Hole, the Fed is going to be quite hawkish. And I think most asset prices are going to go down. I'm known as a commodities and gold bull, but I haven't been that bullish in gold and commodities the last few months. And I think you still have to be cautious going into the fall. Now, at some point, like 2018, I do think that gold will disconnect. It's happened in 2020, 2021 too, and start going higher while the market goes lower. But right now, that doesn't look like that's the case to me. I think the dollar might have another move higher and everything might fall for a few months. So I think right now you have to be, like, obviously, if you're more sophisticated, you could do some put options, you could short a little bit, have some short ETFs. You mentioned in our last video, we talked about, stocks like NVIDIA and Tesla that actually have ETFs. So you can just short those top stocks via those ETFs. So you could do stuff like that, but I really think now you have to be cautious. And I do believe in a lot of seasonalities. And now for the next few months is a bad seasonality time. And I think it's a time too where the Fed is going to remain kind of more hawkish. So I think you just have to be really cautious and just wait. And like you're talking like right now it's the end of August, basically. It's going to be August 22nd, the next time the markets trade. What are you going to really miss the next 2 months? Yeah, like gold there. I wouldn't be surprised if gold goes to 1600. I wouldn't be surprised at this point. It bounced off support in this last rally. Maybe it needs to break support and go a bit lower to kind of really flush everyone out. Or does it just kind of go back, base around here and go higher? I don't know. But I can tell you, you'll look at that decline in 2018 I talked about, and even look at the low in 2015, when the Fed did finally finish and the market kind of bottomed, gold began to turn around. And by the way, I'm not an ultra hawk. I think that the Fed just has got to get those rates up to 3.5%. And then that's when they'll stop. Now, they may not cut right away, but then they'll stop raising. And I think when they stop raising more than the stock market, I think that's when the commodities and precious metals markets can move. And if you go look at every time they pivot, like 2016, early 2016, like 2018, 2019, when they went to zero, in April 2020, like 2009, for whatever reason, gold, I just wrote an article this for Financial Intelligence Report for, it's a magazine I write for. For whatever reason, that first 6, 12 months, 18 months of that bull market, gold and gold stocks are like the best place to be. So I still have long-term positions, but I think when you see the end of this rate hike cycle, that's when you're going to, look how well gold did there. And if you look at the gold stocks, they did even better from say like late 2018 to late 2019, and really you could say it was late 2018 to really, if you look at the gold stocks, it was early 2021. COVID was just kind of a blip for the gold stocks,
Yeah, when it came to gold, when the stock market crashed in 2020 in March, April, gold didn't fall. The S&P fell like 33% and gold fell like 10%. Of course.
Yeah, the gold stocks fell because they got whacked with the market.
Yeah.
You can see it was extremely like short term. But you can see again that 2026, the GDX more than doubled. And then it went up about 70 or 80% from mid 2018 to late 2019. And, that COVID low, it went, it went up 150%. So it's like when you get these kind of pivoting things, I don't know where the GDX will bottom. Let's say it bottoms at 22 or 20. If, the market, if it does trade lower with the market, like that will be a major low. Because remember, we're going to start a major rate cut cycle or a major, or at least finishing in the hiking cycle. And then I think then you're talking like gold stocks probably doing what they did from 01, 02 to 2007, or at least 2008 to 2011, when they went up for years and years and years and multiple hundreds of percent. And even looking from that 2015 low, gold stocks more than doubled and really went up for almost 6 years, So we could see, I think, that kind of move off this low,
Well, the way things are going now, with what's everything going on in the market, what are you most excited about, like with your subscribers and the types of trades you see to do?
Well, what I'm doing is I'm restarting my pay services. I have like a premium service, my regular service, which is $70 a month. The first, and then I have an elite service, which is you can get a lifetime subscription, which give you a lifetime to premium for only $1,000, and then for another $1,000 a year, you can keep doing the premium, which is option trades. We have message boards, but anyhow, I'm doing about 12 videos on because there are a lot of value stocks paying huge dividends that are cheap out there. Value stocks to buy, gold stocks to buy, junior mining stocks to buy, and I'm talking about all that stuff. And then what I'm going to do is, I'm giving you basically 30, 40 stocks that I like in all these different sectors, but just kind of saying, look, it might not right now might not be the time, but if the market tanks at some point, be it this fall or sometime next year, these are stocks you can kind of swoop in on, and do that. Like, and they range from everything from agriculture to emerging markets to metals to even I know people think I'm a perma bear, but there's even some technology stocks I really like, so at the moment, like some tech sectors. So but you just have to but I think you have to be patient right now,
Well,
because the market's just not cheap right now. That's the problem in the end.
But to be able to have a shopping list to buy, you got to make it. You got to be prepared ahead of time. That's what I'm afraid with the meme stocks is you have people that don't do the homework. They don't really know what stocks are good, and they just get caught up buying something they see up the most on their app on one given day. Then they get trapped.
Well, I saw a guy who was one of the meme stock trading guys saying that, oh, these aren't long-term, they're trades, but what kind of trades are they? Like, it's kind of like, I don't want to sit here and bash crypto, but my issue with the crypto community is not even crypto itself, is that these people, who was saying to sell Bitcoin at 60,000, right? None of them were. They all say, oh, it's going to the moon. And then when it's 20,000,
all credibility.
Yeah. And then it's 20,000, they go, oh, hodl, right?
Yeah.
And then it's like, well, when we do these junior mining stocks, we had stocks like Aftermath Silver went from 8 cents to $1.50, or Wallbridge went from 8 cents to $1. I tell people, and maybe too early when they're up 5-6 times, sell it, get at least your initial capital back, sell half, take your profit. Let's look for the next deal. These people don't do that, right? And same thing. So again, we get back to the mem stocks. This guy was saying it's a trade. Well, it's a trade. The mem stock people are telling these people, oh, it's going to 100. No, it's like if you did buy, Bed Bath & Beyond at 5 or 10, and it went to 25, just sell it. Or whatever, sell it 90% of your position, and the other 10% ends up doing what GameStop did in 2021. Fine, great. You made a bunch of money, but most of the time when something's like doubled or tripled, then it's not based on fundamentals right now. It's like you got to get out of it and you got to leave. So my opinion is these people are shoe shine boys. This is a total fad. This is going to even more than crypto, because maybe crypto has some usages, but like this is just garbage companies trading up way back above their intrinsic value. So this will all collapse. And when we'll really have a bear market bottom is not like, when, GME is 20 is when it's 2. No, remember they did a split.
Anymore.
It doesn't exist anymore. Yeah, I remember they did a split, and before the split, a pre-split, that I think the low on GME is about $1. So so I shouldn't say 2. I should say 20 cents, or like you said, it doesn't exist anymore.
Well, as we wrap up for today, can you tell people where to go to get your newsletter and so forth?
Yeah, we're doing this. I think actually we're going to do a special offer for your people as well for this. So I'm going to launch the premium service. So regardless of Mike does it with me or not, on Tuesday next week. So what's today? That'll be the 23rd. And then I'll have 3 or 4 videos up by then. I've already put up on my elite. If you're interested in my elite service, you can write me at addictedtoprofits@hotmail.com. And I can tell you to do it. I've already put up 2 of the videos and some of our trades for the elite service members. And by the way, the option trading I'm doing, I'm not going to really make that available to premium. It's because option trading is a little more sophisticated. And but you'll have a bunch of these historical videos. And basically by the end of the month, I'll have about 10 to 12 of these videos up, which shows you kind of macro long-term plus these stock ideas, kind of having like I said, a shopping list or whatever. So, and that will, again, that I've put the launch off because I keep having ideas for more content and more content and more content. But I think finally August the 23rd, that will happen. And then till the end of the month, doing the lifetime subscription and the discounted elite subscription, that will last to I'll keep that open to the end of the month. And also, if you're someone who just likes these videos, but maybe needs, advice or whatever, stock picks, I started a Patreon page, which I'll put up, and it's $8 a month. So it's like 2 Starbucks coffees a month. And I just ask people to subscribe to that, because I'm going to keep, like Mike's been doing as well, I'm going to keep doing kind of almost daily, or at least 3, 4, 5 times a week videos for my free list. And by doing the Patreon subscription, you allow me to continue to give content for free, or I not have to get advertisers and the whatnot. And, like I said, $8 a month ends up being like 27 cents a day. So I don't think that's a big deal or a lot to ask. And I'm actually going to start a series where I'll do probably once to twice a month on great investors of the past, guys like Templeton, Buffett, James Dines will probably be the first one I do, because he just passed away. And we'll talk about their philosophies and how they traded and the whatnot. So I think that'll be another thing, and that again will be free of charge. So
yeah, I'm really looking forward to seeing that myself, and I get your pay information too. But thanks for taking the time to talk to me and everyone else. We'll talk again soon.
yeah, thanks for having me.